Good afternoon, everybody. Thank you for joining our very first Corporate Finance Cooper Parry webinar on preparing your business for sale. My name is Ben Rooks. I'm one of the corporate finance partners here at Cooper Parry. I've been advising business owners now for just under 15 years. I feel I'm in a really privileged position to help them realise value over that journey. I also sit on the board of our international network called Global M&A. That's been a real game changer for us in being able to not only identify but access international buyers, which is key for our clients. I'm joined today by a number of colleagues from Cooper Parry. I'll introduce themselves, please.
Hello, good afternoon. I'm Paul Ambrose. I lead our debt advisory business here at Cooper Parry, and I work with all our clients trying to help them raise financing to fund their businesses and their shareholder objectives.
Hi, I'm Andy Parker. I lead our corporate finance business. Despite the age, I have about twice as many years of experience in the M&A market.
It shows, Andy.
It does show. But it's typically working with privately owned businesses like your own, helping them to make decisions about what they want to do next, whether it's raising funding, whether it's growing, whether it's selling.
Good afternoon, I'm Krista Fox. I lead on transactions tax. I have done for many years. No comments about age there, please. If you're looking for tax efficiency in a transaction, tax can influence how and when you do a transaction. You'll be pleased to know that I'm not going to talk tax technical today. My colleagues are very pleased about that. However, I will throw in a few tax points along the way. So I'm going to hand back over to Ben now.
Thanks, Krista. So we've got quite a lot to cover today. It's quite action-packed. We're going to focus on three main discussion areas. So the first of which is really what's going on in the current M&A market, how many deals are happening. Then we're going to talk about getting your business transaction ready. So what things do you need to be thinking about? And then finally, we'll give you a bit of an overview in terms of where we see the options for you as a business owner. We want today to be as interactive as possible. So there is an option to be able to submit questions to us. So please do. We'll try and come back to you during the webinar with those, or at the very least, we'll come back to you at the end. You can also download the slides if you wish, so please do, and you can kind of run through those in advance or as we go through. So what we thought we would do, though, is start with a poll. So hopefully something's flashed up on your screen now with some options. So as a business owner, over the next 12 months, what are your biggest concerns? So we'll come back to that a bit later on. So please look at the options and go through it. So look, why don't we start with our first topic, Andy? So can you give us a bit of an overview about the current M&A market?
Yeah, sure, certainly. I think it's important always to get a bit of a feel for what the market is doing when you're planning your options. Can we have the first slide up here? What we've done here is map out over the last decade the volume of transactions that we've seen across the UK market. If I'd gone back a few more years, you'd have seen this catastrophic drop-off through the global financial crisis in 2009, but then a bounce back. And what we see is pretty much consistency throughout the period. And even though there's been a small drop towards the end of 18, anecdotally at least, it is more of a delay than a real fundamental drop-off. So why do we see that consistency in the market? Well, I think that key points are what I call trigger events. Consistently in privately owned businesses, you're going to get births, deaths, marriages, divorces, the sorts of things which make people just have a think about things that are in their lives, what they want to do, and come to conclusions about where the direction of travel is. And that's been a consistent theme that's been driving that activity.
Yeah, tax is quite topical on that at the moment. Capital gains tax rate, the lowest rate, 10% with entrepreneurs relief. It's been like that for many years. There is a question mark. How long will that continue, particularly with the current political climate? And so what that is fueling a lot of discussions about how can family-owned businesses or owner-managed businesses actually crystallise value and bank that 10% rate. That may be through family succession, management buyout, or opening the discussion about other strategic options for sale.
Certainly. And I think that's been one of the things that's kept that level consistent, because that 10% rate has been there throughout that period, and that has been important. If it changes, who knows? Another factor which is important is on our next slide is just looking at where the buyers for businesses come from. And again, pretty consistently here, about 50% of the market of buyers for businesses come from outside of the UK. We have seen a lot of deals. We've done deals with German companies, with people in Australasia, with people in North America, particularly. And those North American buyers, I think, have been very, very important for the UK market. And they like the fact that we speak a similar language, shall we say, but we also have definitely a very similar approach to business, very open, very straightforward in our approach to business, both US and UK, and the rule of law matters. When you sign a contract, you actually mean to fulfil it. It's not sort of maybe. So it's important, and that's why they like the UK market.
Presumably the dollar sterling exchange rate hasn't hurt either.
It's definitely been an important factor, I think, in the last couple of years. In fact, just after the Brexit vote, I was selling a business. We were in round 2 of bids, and we had a US buyer out there in the front. But they got very nervous about the impact that Brexit might have on the UK economy, and they dropped their price.
Okay.
They still wanted to buy the business, but they dropped the price. We were able to point to the fact that actually you've had a massive discount because sterling has fallen through the floor compared with the dollar. So unless you put your price back up, you're not going to get the business. They did. They won the business, and it's been a really successful investment for them. So international buyers consistently there in the marketplace. The other area I would say of consistency is about private equity. If we flip onto our next slide, again, a few little variations here, but broadly, year in, year out, private equity is there investing, buying privately owned businesses. And I can't see that really changing. Private equity has raised more money in the last decade than ever before in history. And we have unprecedented levels of what we call dry powder, cash that's sitting there waiting to invest. And so even if there is a lot of macroeconomic problems as we withdraw from the European Union, if there is no deal and there's lots of uncertainty around there, private equity are going to have to, because that's their business, they're going to have to keep investing. And so I see them as an important party in the market.
And one of the things that also always fuels the private equity market is the levels of debt available in the market too, which we'll come on to talk about in a second. But it's been pretty constant and very similar to the amount of private equity money that's been raised as well.
I agree. That's important. On our next slide, I just got one of the questions everybody asks us is, how much is my business worth? Well, I'm not going to be able to tell everybody what their business is worth. Every business is different. They're in a different marketplace, different sector. This is a broad collection of data. The one thing about collections of data is it's not accurate. It's definitely not going to represent everybody. What I find valuable, though, is to see the trends that come out of it. And we've split this between 2 different parts of the market, the larger deals in the pink line and deals below 100 million in the purple line. The larger the deal, typically the larger the price and the larger the multiple people will pay for the business. It's a business that's a bit more secure, there's less risk around it, and they're likely to be sustainable. That is continuing to grow, the multiples people are paying there. In the below £100 million marketplace, we've seen good growth, but now probably flatlining. And that probably means that we're at a good place. Prices are very good, very strong, but it's unlikely to shoot up any further.
What about, Paul, in terms of debt then? What are you saying in terms of the debt markets?
Okay, I mean, I think as I alluded to just a moment ago, I think there's been an enormous change in the debt markets. Before I get on to that in detail, let me just flash up our next poll. Be really interested in your views on how you view the lenders that you would be dealing with. So I think we've got a question up on the screen where we're just saying if you can give us an indication of how confident you are with your existing lender relationships and whether you think they would support you if you wanted to raise more money going forwards. So I'd be really interested to get your views, and we'll come back to that in a few minutes. Coming back to the debt market and how they've changed over the last few years, I think there's been a fundamental shift in the UK and in fact European markets since the financial crisis 9 or 10 years ago. What we've really seen, and if we can just flick up the next slide please, what we've really seen is a shift from what was always a bank market where you would just go to your normal lenders that you love or hate and you'd hope to get that debt financing from them. What really happened post 2009 was the influx of a group of institutions called credit funds who are a little bit different. They have a more medium-term approach to life, a little bit similar in some ways to private equity funds, but actually they provide more strategic capital over a longer period of time, and they can be a lot more flexible. So in a world where the banks have been increasingly regulated, increasingly focused on their capital assets and the ratios and all the rest of it that the Bank of England insists on, these credit funds actually are much more flexible and can provide real alternatives to businesses that want to grow, to want to invest in themselves, or indeed actually want to do something to reorganise their shareholder capital.
But so obviously the emergence of these credit funds, what size businesses are they investing in? What kind of size?
It's really interesting. So as I said, that world has been around us for probably the last 8 years or so. So when it began, most of the focus was on what we call the classic mid-market. So there were businesses where maybe profits were over £10 million or that sort of figure. But as that level of capital has grown, and I see new credit funds opening almost every month still, probably 50 or 60 of them out there at last count. But what has happened as a result of that is that actually some of the credit funds have gone into different areas, and that increasingly has meant going into one, private businesses. So they've looked to partner with private businesses where they want to establish a relationship with the management team and the shareholders, but also increasingly down into what we call the lower mid market. So that probably means businesses with profits of around £2 million or more, where those funds can now be a real alternative to the traditional banks.
Understood. Thank you.
Our poll results are now in, Paul.
Okay.
And we asked the viewers what they thought in terms of the confidence they had in their existing lenders. 13% of our viewers today said that they weren't confident.
Okay.
25% said they were, and 63% said they weren't sure.
Okay, that's fair enough. I mean, I suppose the telling statistic there is actually the ones that are confident in their existing lenders. So you're effectively saying that the rest of the audience is either not confident or unsure. Doesn't surprise me in a way. I think what we're seeing from our conversations with the more traditional banks is an element of caution at the moment, maybe not surprising because of the economic uncertainty and political uncertainty, but we are seeing signs of a little bit of cautiousness. As I said a minute ago, my feeling is that there is alternatives out there, or there are alternatives out there. So, but really interesting to get the view from the audience. Thank you.
I think now would be a good time to go on to our second topic. So what we're hoping to cover here is getting your business transaction ready, what things I need to be thinking about. So Andy, can you give us your thoughts on that?
Sure. I think I'll start by just pulling up this slide that you see in front of you. This is by a consulting firm called Sherlaws, who we've done some work with, and I'm fascinated by this model. They've actually pulled this from, I think it was over 200 companies, different sectors, different spaces. Every business is different, but there's a number of key themes. As businesses go through a development phase, they grow, they hit the first wall, but they find a way of climbing over it, and then they move on and get some really strong growth coming through the business. And then they come to a decision point, and that decision point is either they can continue to go and grow, and they probably need some extra resources and skills in their management systems, technology, whatever it is. But that is often the point where they're thinking, actually, is this the right time to sell the business? Should I take on an investor to really help me rev up the growth? Or if I do nothing, we might go backwards. So I quite like that as a model and a way of thinking.
I was just going to ask Andy, so at that kind of point where I guess a decision needs to be made, you see a lot of businesses. What are you typically seeing as some of the, I guess, the drags for value? If you're a purchaser, why are you thinking, I might not want to pay a full price for it, or I might not want to give them as much as the business owner expects? What are the themes?
I think that within the private business space, that the biggest thing is the entrepreneur, the person who's set the business up, who's really developed it and grown it, is so important to the business that actually their fear is that if they leave, will the business be sustainable without them?
Yeah.
So that they might have the customer relationships, they might have the know-how of the business inside their head. And so that's a challenge. So unless the business has a good management structure, a good team of people who can take the business forward, the ability to scale it up and get growth afterwards is limited. And so that's why people don't tend to pay such a high price if it is reliant on one person. We also see businesses sometimes haven't invested in their financial systems, so don't have sufficient information financially or data about the way the business operates. And we find that buyers these days are data hungry. They want to see every moving part that's made up the business, because that helps them work out how they're going to take it forward.
Krista, what about, I guess, going through this kind of business life cycle? What things from a tax perspective should business owners be thinking about?
It's really important to think tax through that growth cycle. I'd sort of put it into sort of three key areas. One being around incentives, the second being around the structure of the business, and then the third being around sort of whether reliefs are available, so whether the shareholders are going to get all the reliefs they're expecting. If I just sort of touch on each of those in turn. So around the incentives, Andy, you picked up on the key point. It's absolutely critical that there is that strength of management team behind. So how do you get a strong management team? How do you attract and retain? And share incentives can be really favourable for that in terms of actually getting them aligned with the shareholder objectives, but also give them a very tax efficient award at the end. And it's really important to consider that quite early on as well, to give that sort of pathway in to developing value. The second is around structure. So it's worthwhile thinking, well, on a set event, what's going to be sold? Is it the whole or is it just part? Now, if there's parts of the business, either property or divisions that need to be divested, that needs to be looked at sooner rather than later to do that in a tax efficient way. The third area is around relief. So I mentioned 10% tax relief earlier. It's not necessarily a given that that's available. We need to look quite carefully. Very complex rules behind that to make sure that all people who are expecting to get 10% will get 10%. And if not, there's a lead time into planning. I've come across it so many times when just going into transaction, we look at the entrepreneur's relief position and realise there's an issue. And actually, you need a 2-year lead time into that now. So you've really got to think about it as soon as you start thinking there might be an exit event. So overall, a lot to think about on tax, but as soon as possible when you start thinking about exit.
Thank you for that. I think that probably leads us quite nicely now onto kind of what your options are. So you've, blood, sweat, tears, you've built this great business, very valuable. What are my options now as a business owner? I guess we're going to talk about four kind of key ones. The first of which is retaining and growing your business organically. Paul, do you want to pick up a few points there?
I'll just relate this into my world, the debt world. So I think this is fundamentally where you're thinking about maintaining ownership of the business. You're not at this stage thinking about either private equity or potentially a sale to another business. So this is really what can you do using debt capital available from the market, either to grow the business through acquisition or through investing in strategic capex, or is there a way that you can use that external capital to reorganise the shareholder base? We've been cognizant of some of the tax issues that Krista's alluded to in terms of actually solving some kind of shareholder situation. I worked for a private company 2 or 3 years ago where we were able to use reasonable sized debt package to unlock a situation where you had a company owned by family and management team. Management team had worked really hard through the kind of emergence from the recession to rebuild the business. The family were related to the founders of the business from a couple of generations before, and they had a real emotional attachment to the business, so they were really uncomfortable with selling. But management team wanted some kind of event so that they could get what they felt was their reward. So again, we were able to use with clever tax structuring and with going to the debt markets to structure something that meant that management got that value off the table, and the family shareholders actually increased their shareholding so that they felt they got some money off the table too, and they were able to continue their legacy and grow the legacy going forward.
And I guess another area that you touched on, Andy, kind of briefly, was private equity being a key part of this big market. I guess a lot of business owners probably heard some horror stories, or there's a bit of uncertainty out there, or it's just actually probably not very well understood. Do you want to talk us through kind of private equity?
I think your point there, Ben, that a lot of private businesses look at private equity with a bit of trepidation. They've heard some negative stories about them sort of stripping the business and so on. In fact, last year I was working with a client who was absolutely against private equity coming in, but we persuaded them to actually just meet a couple of people. And they came out thinking, actually, they'd be really good for this business. There's a big opportunity for the management team to do something. In the end, we sold it to a North American buyer.
Okay.
But actually just meeting and talking through it was quite important. So what does private equity do? Well, they are a really good alternative. The ability for you as a business owner to de-risk. As one of my clients once said, put some money behind the clock. Something that nobody can touch. It's in your bank. It's not going to go anywhere. So a sale of the business, but then still be incentivized to keep growing the business. And now you're growing a business with a partner who is absolutely focused on the ultimate exit, whether that's 3, 4, 5 years' time. And their focus is growing the business, growing the capital value of the business over time. Now, there's challenges with that.
Yeah, of course.
You are now sitting with a partner around your board table, where probably you with 2 or 3 other people were making all the decisions. You've got somebody who's going to be asking you questions every month, probably every week. You're going to
attending board meetings,
attending the board meetings, wanting information, but supporting you.
Yeah.
Supporting you with finance, supporting you with intellectual capital that they can bring to the party. And then when it comes to growth areas like acquisition, they've got a checkbook. And that's really, really helpful if you're looking to grow through that means.
So what are they typically looking for, though? What makes it attractive to private equity?
I'd say number one is management.
I would agree with that.
Quality of the management team, the people who can keep growing the business. That could be the entrepreneur, it could be the team that is surrounded with. There's also looking at where there is a differentiated offering. So you've got some real skills in the business, some maybe a niche in your marketplace. You might be a market leader. It might be that the market is probably a growth market as well.
Yeah.
That's the sorts of things that will attract the private equity investor into your business.
And I guess finding the right private equity investor is really important. So some of the horror stories I've heard is there just hasn't been that fit between the business owner and those kind of individuals. How do you go about finding the right private equity house for your business?
Probably two or three things to look at. One is, are you picking somebody who is in the right sector? So understand your business first and foremost. Pretty fundamental. They need to understand what your business does and what makes it tick. Then there's the right size. So have they got a checkbook that meets your aspirations? If you're looking to grow the business with acquisitions and they haven't got enough money, they're the wrong party. Yeah. So pick the right party to go along with. That part, and then the third thing I'd say, and probably the most important, is chemistry. Yeah. Understanding your business. Do they understand you? And do they understand what you want? And forging a key relationship there will be key. It's sort of fundamental to a successful.
Typically, that journey is 3 to 5 years, isn't it? So getting the right partners.
That's a long time to be living with somebody if you don't like them.
I agree. So I guess one of the other options that most people think about is, can they find a trade buyer to buy their business? So that's typically finding a corporate buyer, maybe even a competitor. So what we see quite a lot of the time here is, if you can find the right trade buyer for your business, because of the synergies that are available, both from a revenue perspective, operationally, take out some costs, the majority of the time they can pay the highest price. Not always, but the majority of the time they can. So I guess I'm thinking about a business that we sold to a US trade buyer maybe just over 12 months ago, where we found the lookalike business kind of in the US through our international network, So very similar, really good fit between the two businesses. It was private equity backed, so they were going on an acquisition trail, and they just gelled really well, went on to make some acquisitions and then ultimately list. And that buyer ended up paying the highest through a combined process of talking to private equity as well. I guess we've also seen it the other way, where I'm thinking about a dental business that we sold just over 12 months ago. Dental is a hot sector at the moment. There's lots of activity. The private equity house that we ended up buying it, this was going to be a platform investment for them. Very fragmented. They were going to make quite a lot of acquisitions. And I think it's fair to say, by finding the right private equity house in that situation, they outbid trade and paid more than what a trade buyer could, just because of appetite for the sector.
Yep.
So, I get, what else do you need to think about if you're thinking kind of trade sale? One of the other attractions to some people is the opportunity to have a larger role within the business for both them and their management team. So, can they be the division of that, the MD of that division within the trade, corporate? Can they be the UK MD? So we've seen that on a lot of our transactions where the role becomes bigger.
It's something that's really consistent for me, is that entrepreneurs have built a business and they know that the fundamental building blocks of that business is the management team. It's really important for them to find that those team have a bigger opportunity, and a real role in the business going forward.
And I think it would be fair to say for a lot of people that build their own business, actually going back into a corporate or a trade buyer can be challenging. You're used to calling all your own shots, used to making all your own decisions, and clearly that does change where you've got kind of boards and you can influence, but maybe it's not your decision. So it's not for everyone staying in a corporate, but there are kind of wider opportunities. So I guess for us as well, it's one of the key things that we do when we're thinking about trade buyers and working with businesses is start to think about who the right trade buyer for them is, who could pay a strategic premium, understand what their acquisition criteria is, and it's really all about timing. So you can identify the right trade buyer, but trade buyers go through a cycle. Sometimes they want to make acquisitions, sometimes it's just off the agenda. So you also need a bit of luck, but understanding your buyer pool and what's attractive to them is really important. So the final thing that we were going to mention today that I think it's fair to say that we see less of is IPOs. So this is when you take your business to the market and list it. So I guess the most relevant market for the businesses that we come in contact with is the AIM market, so the junior market. If you looked at the overall stats for listings to the AIM market in 2014, for example, there were 80 new listings in that year. What we have subsequently seen post 2014 is that number has been between 30 or 40. So quite a drop off actually from the peak of 2018. And actually, I've been told only 4 to the end of May this year. So a hell of a drop, and I'm sure uncertainty and Brexit have all kind of played a part in that.
And I think one of the things with the IPO market, whether it's AIM, whether it's the main market, is it's very susceptible to volatility through just sentiment.
Yeah.
So a big event happens, may not any way related to your company, but the market appetite drops suddenly overnight.
Yeah.
And it particularly happens in the 11th hour, just before you're planning to list. We hear so many horror stories of the price dropping off, so that what people were expecting drops down significantly. Look, it works for some companies, but many it's not the right answer.
Yeah, and there's some kudos about your shares being traded publicly and legacy, so I do get all of that. The other side of that is clearly, I think the costs for listing relative to the capital raise can be very expensive. That puts quite a lot of people off. And then you're entering a whole new era in terms of corporate governance, regulation, and public scrutiny, which you would expect when you've got public owners of your business. So not for everyone, but it is an option for some. So
no, great.
I think hopefully that's given you a little bit of an overview in terms of what some of the options might be for you to think about as a business owner if you're contemplating a transaction. I think the important thing for me is to have options, and it's great to explore various things. When we look at processes and we're advising business owners, what is fundamentally important is to understand what their objectives are. So is that to maximize value with a trade player, get out? Is it, you know what, it'd be quite nice to crystallize some value today and then build it, grow it, and ideally take a bigger check off the table next time? So, you know, what do I want for my second team management? All of that needs to be factored in and a process tailored. What you often see, and we do it quite a lot, we combine a number of options together and we test the market. So we would dual track maybe a private equity process with a trade process for business owners to have really the best of both worlds and make a decision based on an informed decision based on some offers of what the best option is for them. So I think that's the ideal scenario. Laura, we have the results of the poll.
We have. You might not be particularly surprised to hear, but 50% of our viewers today thought that Brexit was the biggest concern over the next 12 months, followed by 20% thinking it would be recruitment.
Okay.
Who wants to comment on that?
Well, I'm definitely not surprised that Brexit is important. I think a couple of things that I said earlier are really relevant here. That yes, there will be short-term effects of it in the M&A market, I think, but we've already probably seen an impact of that with people just waiting for that decision to be made and so on. But that's also created a bit of a backlog and now a lot more activity happening. So I think we'll probably see something similar unless we have a change in government or a total change in the UK economy, and I can't see that happening.
I think that's covered all of the main topics that we're going to do. What we were hoping to do is answer some questions that have come in live to us. Have we had any, Laura, through that we can pick up as a panel?
We have. I think going back to the Brexit point, one of the questions coming through is, are overseas buyers requesting more due diligence in light of Brexit?
That's an interesting question. We have tended, when we've been selling businesses, we've tended to take the front foot on this. We know that people will perceive risks in the economy. What we've done is go out and try to put together as much evidence that the company won't be affected. So we've looked back at previous cyclical or structural events in the economy to see how the business has fared during that period, and then presented the data to say, yes, there's been an impact, but this is how they've dealt with it in the past. These are our plans of how we will deal with it now, and this is what we think the result will be.
And this also links nicely onto another question. This one could be for you, Paul. What do you expect to happen to the lending markets?
Again, I think that's not a surprising question. I think I think I'll explain it a little bit like the analogy with what I saw after the original Brexit vote back in 2016. I think what you saw was actually what I call a financing market reaction, which effectively means that people there's a kind of immediate shock, and you see changes in the equity markets, you see changes in the liquid debt markets. Fundamentally, I saw that passed relatively quickly, and actually funders of this type of the markets, the UK mid market, get back to fundamentals and understanding what's going on in their economy, their part of the market. Yes, there might be some more caution, but I think that caution will be targeted. It will be seeking to understand where there might be increased risks in particular sectors. So I'm not concerned particularly that there will be a wholesale shock. I think there will be some maybe targeted resizing of risk appetite. With the levels of capital that are still out in the market, I still think that fundamentally the UK market is still fundable.
And taking a break from Brexit questions, another question has come in. We talked a little bit about multiples depending on the sector, and somebody has asked, what are the current hot sectors in terms of maximum multiples?
Okay, right, you get some extremes in sectors. So some areas like biotech and life sciences are multiples that, frankly, you're way off the scale. Nothing related to good old cash flow, which is where I sort of really get my understanding going. But I would say that in terms of the sectors we work with, few areas. Tech-enabled services, so businesses which are service, fundamental part of the UK economy, but using technology really well to scale them, to mean that they can manage their cost base effectively. That is a really attractive space, and we've done a few deals in that sort of area recently. And then secondly, healthcare. Again, we do a lot of deals in the healthcare market. Healthcare is driven by some fundamental factors. We're getting older, we're needing care longer. That means that there is investment going in, whether it's into products to sustain people's living, whether it's services around it, and therefore it's always an attractive marketplace for people to invest.
And I would also add that I think the multiples on that can be significant. You can be double digit into the teens on that, and I think that goes for any business that's got visibility of their revenue. If there is a downturn coming, then people will look for downside protection. So if you've got visibility of your income, contracts, all of that will be attractive for sure, and will command a higher revenue than maybe some of those businesses that are project based, and you don't know where the next project is coming a little bit. So, great. I think that's covered all the questions we got in. If there's anything that you would like to ask that you haven't, please submit it to us. We'll come back to you after the webinar. The last thing from me is to say thank you very much for tuning in. Thank you to the panel. You'll see a survey coming on screen. If you could just take a couple of minutes to fill that in, that would be much appreciated. And last thing is, if you would like to have a coffee or pick up on any of the themes that we've talked about in person, please get in touch. And thank you very much for joining us.
Thank you.
Thanks.